Okay guys, Sunday the 11th of March and we're on the FTSE 100. So as always, we will have a quick recap of this market from last week in relation to our analysis, and then we'll go on to look at the market for the trading week ahead. We'll set up our zones for day trading and we'll go over the market sentiment. So before we get into that, first of all, I hope you all had a good trading week last week. I know especially a couple of zone traders, there was actually a few of them, I think it was about 3 or 4, who were using last week as a week to do all their own analysis, set up all their own zones, basically starting to do everything by themselves. So hopefully you guys all had a good trading week. Okay, so for the FTSE last week, let's have a look. Went over these areas right here were very key support, and if we started to break down below these levels, we were then expecting a stronger correction on the FTSE. So Monday and Wednesday testing at the levels of support. 7061 to 7077, and then 7093 to around about 7100. So we tested at the lower zone on Monday and Wednesday, strong move up and a strong move up. Now, apart from that, last week, I was really looking for potential weakness as the market pressed higher. Tuesday, we tested up at our zone at 7185 to 7200. And now what we went over last week was how the market had came up, it had made a swing, a second swing, potentially creating that double top, and then we've broken down. So coming back up, this was the central point of that double top, and it was a good area to look for potential resistance. Now on Tuesday, came up and tested, very, very strong move down. Now why this is worthwhile going over is because this Tuesday day, so we came up and we tested at this level. I already had it in my head as a high probability setup level. I was looking for shorts up there. The market came up, you can see the reaction. It came up, it reacted bearish, and it had a very strong move down. Now, Tuesday, I took a trade from this level, a short position. The market chopped sideways, and then it popped up, and it took me out for a loss. And then the market made the huge move down. So, there was the correct analysis. I had it as a very high probability area. There was the setup there on the charts, and I was happy to get into the trade. And then still, the market stopped me out. And why it's worthwhile going over is because there's a danger as a trader that you start to think that the more you learn and the better you become as a trader, it's almost like you can eradicate the losses. You start to think, I'm going to develop this sort of third sense of this market. I'm going to become in tune with the market and I'm not going to have losses anymore. And it's almost as though that's what you're aiming for. You start to think, I'm on a learning process here. And the more I learn, the less losses are going to happen. And eventually, there's going to be no losses. I'm just going to have winning trades. That's what I see, even if they don't really know that they're doing it. That's what I see a lot of beginners doing. And it's just not possible. You're going to have losing trades. That one there, I was very happy with it. It was a high probability trade. I was happy with the setup. And it just came up and took my stop out by around about 1.5 points. And then it made that very strong bearish crash. So for last week, that means... Let me think. On the Monday, I had a profitable Monday. On the Tuesday, I had a down Tuesday. That was the only trade that I took. On the Wednesday, I had an up Wednesday. Thursday, I took 2 trades, both of which were break even. Friday, it was non-farm payroll day, which I don't trade. So there was no trades. So last week was a fairly lean week. I was up about 0.7 to 0.8% on the week. And it's a very normal trading week. So I didn't have the trading Friday because of non-farm payroll. Obviously, usually I'm trading the Friday. But that's a very normal week. And the problem is a lot of people think that they should be trading and they should be making money, every single day. And they should be making huge profits every single week. It's not about that. It's about making consistent small profits on the markets and then using things like compounding to build your account and build your income source. You need to get away from the belief that you're going to be able to win every trade. Now, having said that, your losing trades have to be part of your trading system. You can't be looking at your mistakes, because what I also see is people, they take trades, they make mistakes and they take losses. They'll skip a good trade, which is part of their trading system, and then they'll take another one from their trading system and it'll be the loss. And then they'll start to say, well, why am I not profitable here? It's because, well, you're picking and choosing on your trading system. You need to be consistent in what it is that you're doing. And if you're doing that, it should be working out to your trading system. So that's pretty much everything. Yeah, that's a pretty much typical week. Now, having said that also, with your trading system, it depends the way you're trading. The way I trade is I have a lot more break-even trades than losing trades because I'm just being very, very cautious. And I miss lots of profitable trades doing it that way. But it's just because my psychology, I prefer missing the trade and taking the break-even than having the loss and then having that psychological thing in your head where it starts to say, you know, you're going to need to make this money back. I prefer just taking the break-even trade. It means I can't avoid losses, but by doing that, it helps me eradicate a lot of them. And then I just have, you know, slow, steady building. Okay, guys, so let's get back into the reason you're watching the video. Let's get back into the review. So for this market, okay, we had a nice strong bullish move up coming into the end of the week. Wednesday, Thursday, Friday, nice strong bullish movement. The zones down below, 7061 to 7077, 7093, 7101, remain very key support. Okay, if the market comes back down, more than happy to look for bullish positions, and it's if still we start breaking down below that we're then looking for the stronger bearish movements on this market. That will be giving us the clue that the FTSE is looking to make a stronger bearish correction. Now, up above, what I'm going to do is I'm going to take out these zones and we're going to redo them. We're going to have a look at the price action levels that are making us or giving us the clues, and we're going to go over the way I'm going to be looking at each of them because they're not quite perfect. Get rid of all these. Okay, so the first thing is, as the market is coming back up like this, we're just starting to test up above this little swing point. For me, the FTSE is still not bullish. Now, we've had a nice bullish bounce created down here. There's a potential that we're coming down, bounced, coming down, and bounced, and creating a double bottom. If that is the case, market starts to get back above previous highs, then the market starts to turn more bullish. And really, it would need to also come back up above this previous gap level right here from Friday the 2nd to Monday the 5th, this gap down. If we start breaking up above that level, sure thing, the FTSE is starting to look more bullish. At present, it is still looking more bearish. And I would say we're still testing at this previous little swing point. So really, let's have a look here. I'm going to put in a couple of zones up here. I'm going to put in 7295 down toward, so really I want to make that into two zones, down toward 7280 right here. We've also got one up above there that we'll look at in a minute. We're also going to take 7270 down, all the way down into 7260. And then down below there, we've really got around about 45 down towards 7240. Right here. And right here. The market is just coming up to test at those levels at present. Now, coming into next week, the zones at these levels are very strong resistance. As I've mentioned, really still looking like we're testing at this swing point. We've had a lot of price action here. We've had a nice flat section with a very strong spike up, which failed on the 8th of February. We've had the market chopping around these levels, and we've also had a gap. So from Friday the 23rd up into Monday the 26th, there's a gap level. So 1, 2, and 3 levels of potential resistance. If the market tests at these levels, I'm happy to look for those potential sell positions. Up above, again, it's more resistance. 7.3, around 7.310, all the way up toward 7.326, right here. Again, good level of resistance. If the market's coming up, I'm still happy to look for those potential bearish positions. Really, if we start breaking up above 7.295, I'd be happy to look for bullish bounces moving up into that 7.310 to 7.325 level. But up above, this whole section remains key resistance. Now, down below, for potential continuation, let's have a look at some of these key levels. We've got 7.2, what are we at? 7.216. Really, I want to take it all the way down here, but it's too big a zone, so I'm going to split it into two zones. Down towards 7.200, so the round number is 7.200. right here. If we see the market pulling back, this is a nice level of support to look for potential bullish bounces. Let me mark that in right here. Down below there, we've still got really a little bit more minor this zone, 7190 to 7180 right here. Again, it's a potential support area, but it's a little bit more minor. But if we are starting to break through here, then I'd really expect the market to come down and test at least 7160. I'd be expecting a further test of 7150, which is a very strong level of support. 7155, 7140. So really key support levels, this one, and this one. Key resistance up above, we still have 1, 2, 3, and 4. A little bit more minor sitting in between. So those are, I'm just double checking, these are pretty much the main levels coming into next week. So pressing up remains key resistance. We've had a huge move down on the FTSE. Now we have started to find support once and twice. This second time has also produced a higher touch. So we came down, tested at around about 6920. Second test around about 7060. So the bulls have stepped in earlier at this point. So there is the potential that we're going to come up. If we start to break up above these levels, the market will then be turning more bullish. But at present, it's not giving us that indication. So resistance, 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 and resistance. If we start to break above this one, I'd be happy to start looking for the bullish bounces further up. If we start breaking above 7326, I want to be a little bit careful of the previous swing at 7335 to 7342, because that is again a level of resistance. And we're also coming up into the gap area. You want to be careful with large gaps like this, because you can quite often see reactions coming at random points in the gap. You know, the bears stepping back in and forcing the market down. But at present, key levels up above of resistance, key levels down below of potential support. Really, this one is very key. If we start breaking down below this level also, I'd then be happy to look for the move down into these zones down below. In between, a little bit more minor, both areas of support and resistance. Okay guys, so that's everything for this week. As always, I hope you found that helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.